Hi, this is Ian Coleman from PIA. This is the weekly video analysis for FXMajors for the week 14th of May 2018. Quite interesting that we saw a stalling in buying in the dollar index last week. Our long-term bias is still to the upside, but there is scope for a correction lower at the beginning of this week. So we're going to break down some of the time frames. This is the weekly chart, dollar index, DXY. We're looking for this first bearish Elliott wave formation to have completed, and we're now assessed as being in this probably mixed, volatile, choppy correction to the upside. Now we can see that the majority of last week's initial rally got reversed, and there is scope for further selling going into this week. Only a weekly close under this sort of level, 91.50, would then form an evening doji star formation and highlight the possibility of further losses. But our medium-term focus is still around here, around 96, the figure, and that's trendline resistance, potential of a right shoulder of a bearish head and shoulders pattern. So this would be the left shoulder, this would be the head, this would be the right shoulder, and obviously this would be the neckline, and it's also a 50% pullback level of this sell-off. So this is our medium-term target to then get bearish on the dollar once more. If we go to the daily chart, here we can see five-wave sequence to the downside, broken out of a channel formation to the upside. We've actually got bespoke resistance coming in at 93.18. 3 times last week, levels above there got sold into. Bespoke support this week is at 91.80, and if we look across here to previous price action, we can see that that area has been quite pivotal. So levels to watch to the downside are going to be 92.10, which is the reverse trendline support, and then 91.80, which is our bespoke support. And we're going to be looking at buying dollar dips around these levels for the week 14th of May. Now, if we reflect that bias back onto major currency pairs, let's just go to the weekly chart first to highlight why we're still bearish or long-term bearish on euro dollar. Okay, we've broken a wedge formation to the downside, quite an impulsive move. The opposite of the dollar index in the fact that the majority of last week's initial losses have been recaptured. We have bespoke support at 118.07. We just missed that to the downside. We've got a 161.8% extension level here. So we're looking for this move higher again to be corrective. We've got a Marubozu level located around about 120.38. We're looking for rallies to be sold into, and then we're looking for another drive lower towards this sort of level, 114.90, which is a 261.8% extension level, or around about 115.60. If we go back to the daily chart, and this sort of highlights while our levels where we're looking to get short again in this major currency pair. So morning doji star has been posted, which highlights the short-term bias being to the upside. However, we've got a 23.6% pullback level here at 119.78. We've got a 38.2% pullback level here at 120.73. Now, the reason that we've highlighted both of those levels is because they're common pullback levels for fourth wave corrections. So if there's an Elliott wave formation, this would be 1, 2, down in 3, and then up in 4 before we take the drive lower in the fifth wave. Now we've got reverse trendline resistance coming in at 120.10. We've got our bespoke resistance at 120.20. So that's going to be the area that we're going to be focusing on this week to try and get short again in euro dollar, and obviously to play the euro dollar to the downside while the dollar index moves again to the upside. Sterling dollar, we're highlighting what we believe are the most significant chart or time frames for the different currency pairs. So here we see a 5-wave completion to the upside, bearish outside week, strong move to the downside, and then we've posted this doji style candle from last week, which highlights indecision. Now, reverse trendline resistance is going to come in around about 137.45, and we've got our bespoke resistance at 137.24. So that's going to be our prime area again this week to try and get short and take sterling dollar further to the downside. If we look to the weekly chart, here we can see 137.24. This area here, it was support, okay, with the swing low from the 3rd of January was at, let's just have a look, swing low 137.12. So that then becomes resistance, okay, so what was support becomes resistance. So we've got 137.12, we've got our bespoke level again, as we've highlighted at 137.24, and then we've got this 23.6% pullback level. The fact that we've had such a strong sell-off normally highlights as well that any corrections that we get to the upside are limited. So 23.6 is probably going to be the Fibonacci retracement level to focus on this week. Dollar Swiss, again, we're just highlighting the chart that has the most significant technical view for this week. We've broken this wedge formation to the upside. We've got reverse trendline support coming in at 98.94. Now we've got our bespoke support at 98.90. So again, this is our sort of prime area that we're going to look to get long in dollars again. And there's this case dollar Swiss to take this currency pair further to the upside, and our long-term target, like we highlighted last week, is going to be around about 106, the figure 106.50 over the long term. Now dollar CAD, not as easy, nothing's really easy, but not highlighting any sort of confluence areas for this currency pair next week. The long-term bias is still to the upside. We've got trendline resistance located at 131.12. But the fact that we posted this bearish outside week with levels above the Ishimoku cloud being sold into means that we could see more of a sustained correction to the downside this week. We've got our support located at 127.60, and we can note that levels around there were bought into twice last week, but the follow-through buying has been limited, and we're really going to be quite cautious of dollar CAD this week for the potential of a stronger correction to the downside. A break of 128.31, which is our bespoke resistance, comes in around about here, and then we turn bullish once more. But at the moment, pretty much in no man's land for dollar CAD, and we need to see some sort of decent price action around some relevant levels, which we just haven't got at the moment. Strangely enough, the fact that we think that there might be a deeper correction in dollar CAD, we also think that there's possibility for a higher correction in Aussie dollar. So if we look to this chart here, this is the weekly chart, we can see wave 1, wave 2, and then strong sell-off, spikes, doji formations under the 161.8% extension level at 75.13. Now, the reverse trendline resistance for this wedge breakout is seen at 76.54, and our bespoke resistance is at 76.49. So there's scope for a pretty strong corrective recovery in Aussie dollar this week, and normally if you see that in one of the commodity pairs, you'll see it in another. So again, scope for dollar CAD to move further to the downside, scope for Aussie dollar to move further to the upside, but with the bias still being in the case of Aussie dollar still on lower levels. So 76.50 is sort of the area that we're going to be looking at. And if we break down to a daily chart, we can see here that there's pretty mixed volatile trading. There's even scope for maybe a dip to be bought into early on next week, and a reverse head and shoulders being posted. So this will be a left shoulder, head, potential right shoulder, and then to move higher towards this 76.50 level. Also, what we should note, swing lows in April and then swing highs in December. So again, this level being pretty pivotal, and we wouldn't expect much of a move above 76.50 next week. Kind of cross currencies, euro sterling. We posted a 13 count. We limited. We actually took our profit in euro sterling up around these levels. We're now flat. Most significant level really for this week. I'm expecting this cross currency to be mixed volatile. We've got a Marubozu level from Thursday's price action after the B of E at 87.80. We've got our bespoke support at 87.84. This level again has been quite pivotal. So going into next week, we're looking to buy dips, but the long-term picture is pretty mixed. And this whole move to the upside, with it being very mixed, very volatile, looks corrective. And we are going to be looking for top-in formations in euro sterling for a medium-term sell trade. Euro yen, and again I think we should break down the time frames here. Bearish outside month, Marubozu has held. We've moved to the downside, but dips have been bought. Weekly chart, we can see this first impulse move to the downside, which has caused that that bearish outside month and obviously left that Marubozu level. The scope for this to be a free wave correction, but over the long to medium term, this level here, 115, the figure, with it being a previous swing low and a 261.8% extension level, is our prime focus. Breaking down to the daily chart, and here we saw a move lower from levels close to the 50% pullback level. We broke the channel formation to the downside, but we've moved back inside. Prime short entry at the beginning of the week is at 131, the figure. Now that is our bespoke resistance, and it's also this Ishimoku cloud. So again, the medium-term picture is a little bit mixed. We are out of our short trade in this cross currency, and we're looking to sell into rallies over the sort of medium term. So 131, the figure, is our first resistance level. We'll break there, and we're probably going to have to reassess where we think the long-term bearish trigger should be in euro yen. Okay, I hope you find the videos beneficial, and we'll keep you informed of any changes in any of these long-term views in the major currency pairs. Have a great week. Thank you very much.